So this is the FXE trade. We are back to the euro, and looks like there was some kind of stability happening in the euro market. The rumor mill is that the European Central Bank was buying up euros to take up the demand. So euro seems to be under some kind of a recovery this morning. It's up about 21 cents, the FXE. So our put is down about $100 or $87 today. Not a big deal. Yesterday we had a little bit over of $1,000 profit still left. We still have $962 of profit on this trade. So I'm not going to worry about it. I think let's let it slide and see what happens over the weekend. We have 134 days to expiry on this trade. In general, if we look at the charts for the FXE, let me just populate the FXE chart. You can see a little bit of a bump today right there. But, yesterday it hit a nice point of 128.43. That was the low yesterday. Today it's just, it's peaking just above 129. The chart is still bearish. So I think, we've already captured a nice profit. We've got a profit of about $2,000 already on this trade. And we still have a profit of almost $1,000 still left on the trade. So the euros is at 129.01. So perhaps what we will do is, this might be interesting to show you guys. What I'm going to do then is I'm going to try to put a conditional order on this. So the condition is that if the euro starts going above 129.50, say, if the euro goes above 129.50, then we can say that the euro has found a support and it's on its way up. So what I'm going to do is I'm going to put a conditional order that says, let's sell our put options if the FXE goes above $129.50. So 129.50 is our trigger price. And at that point, whatever profit, we'll probably lose a little bit more. If it does go up to 129.50, we'll probably lose another couple of $100. But that's okay. I want to at least cap it right there. So we'll capture about 700 or 750 out of this 950, and we would have closed the trade. And that's a good way of closing the trade, because we already have a profit of $2,000 on this trade. So that's, the trade's worked out very well for us so far. So instead of milking it down to every last bit, what we need to do is, we know we started this euro trade with 20 contracts, and we did the first round, we took 5 contracts off the table. We took some profit there. The next time we took about 7 contracts off the table, and then yesterday we took off 3 contracts. So we're left with 5 contracts. The euro has a temporary support, but if the euro climbs up to more than 129.50, then I just want to capture whatever profit there is on this trade and then move on. So let's do that. Let's see how we put a conditional order on this trade. So what we're going to do is we're going to sell. So we're going to sell the euro. We're going to sell 5 put options on the euro, and different platforms are going to have different implementations, and I think I mentioned this in the order types in the options market course also. So in Thinkorswim, there's a little wrench here at the very end of the order entry bar, and what we can do is, here we can put our conditions. So what I'm going to do is, first of all, we're going to trade the FXE, the 135 put. We want to sell that, so we want to sell 5 contracts of the FXE. And if you see here, time in force, usually if you just put it as a day order, it's going to get cancelled at the end of the day if it doesn't execute. So what I'm going to do is click the GTC checkbox, and GTC stands for good till cancelled. So this order will remain open at the end of every day until I either cancel it or the order gets executed, which means our conditions were satisfied, and therefore the order will get executed. So what we're going to do is, I'm going to put these things sometimes are confusing, but let's see. Okay, yeah, here I'm going to put our trigger. So here the trigger is, the mark is at or above 129.50. So what we are saying is, if the mark is the midpoint, if the midpoint between the bid and the ask of the FXC itself, so the FXC is right here. So the bid is 128.99, the ask is 129. So you can see there's a 1 cent difference. But what we're saying is, if there was a 2 cent difference, then the mark would be in between. Like right now, it's a 2 cent difference. So if the mark, which is the in-between price, is at or above 129.50, wait until the following condition is satisfied. Mark price of the security is equal to or greater than 129.50. This order will show a wait condition status during waiting. So submit the following order. Sell 5 put options of the 135 strike September series at the current market price. The order is valid until it's either filled or it's cancelled. So that is what we are saying. It's going to be a good till cancelled. So and if it's a good till cancelled order, I'm just going to put it as a market order to keep things simple. But here you can come and play around with this. I generally don't go for very complex orders, but I do put these conditional orders every now and then. And this one is a good trade to put the conditional order. So let's go ahead and turn this order on first, confirm and send. And then what I want to check is one thing. Because I'm putting it as a market order, I want to check. First, let's go to our, here you see, it's a wait condition. So this is our order. It's waiting. It's waiting not to get executed. It's waiting for the condition to get satisfied. So if you look at this, it'll wait until the following condition is satisfied. That is, the mark price of FXC is greater or equal to 129.50. That's exactly what we want. And once it hits 129.50, this is going to go into the market and get and executed as a market order. Now, because I'm executing it as a market order, I just want to make sure of one thing, that is the bid-ask spreads are not too wide on the FXC. So let's go take a look at that. It's the September options. What we have is the 135 puts. So we have this. This is the position we have right here. Okay. So if you see, there is a bid-ask spread of about 15 cents. That's a little high. I would have expected it to be about 5 cents, would have been perfect. Then I would have just let it slide. But on a 15-cent bid-ask spread, so which means if you look at it, we have a 500 shares because we've got 5 contracts. So on 500 shares, if we lose 15 cents, then I'm losing about $75 out of the 5, just on the bid-ask spread. Okay, that's fine. I guess we could live with that. It's not a big deal. We've already made $2,000, and if this order gets executed, we'll be making another $600 or $700. So that's fine. I'll give that. But generally, you should also take a look at this because as a precaution, because you don't want to give too much on the bid-ask spread because you put it as a market order. Remember, when you put it as a market order, the broker is going to execute it at the higher price. So if you're buying, then you're going to pay the higher price. If you're selling, you're going to get the lower price. So you have to remember that. So if the bid-ask spread is wide, maybe like 40, 50 cents, then that can make a big difference. And you have to take that into consideration when you put an order like this. But this is okay. Maximum it'll cost us is about $75. That's fine. We've got a good profit on this trade. So I'm going to leave it at this for now. The FXC trade was a good trade. It went in nicely, and now it's time to exit that trade. So that's as far as the FXC is concerned. We'll see if it hits. Now looks like it's gone below 129 again. So, if it goes down, we are fine. Our order is not going to get executed. Our order is going to get executed only if the FXC Euro ETF goes up past 129.50. So that's as far as this installment of the FXC trade. We'll come back in about 3-4 days or 5 days and see how this is doing. I wanted to come back to our FXC, the Euro trade today. Today is May 11th, and we have a profit of $1,012. The FXE itself has gone down a little bit from yesterday. It's about 128.74. Problems from Europe still seem to be coming in quite strong. So I think we can let this trade play out as we planned. Yesterday we put a conditional order on the FXE. So FXE is not going to get executed unless the FXE itself goes to 129.50. So right now it's at 128.74, and unless it goes to 129.50, it's not going to get executed. But what I also did was I went back on the beginnings of this trade, and it's really interesting because there was a couple of good decisions we made on this one. And so just to recap, we started this trade on April 27th. And the euro was almost at 132. It was at 131.94 on that day. And we were hoping for a drop to about 130 level. And we said if it dropped to about a 130 level, we could pocket about $800 or $1,000 on this trade. And we would exit the trade then. And we also, what we did was we bought an in-the-money put. So we bought the put at a strike price of 135. So this was fairly in the money because the FXE is trading at 132. And whenever you have single dollar strike prices, even a $3 difference can be fairly deep in the money. We didn't look up the deltas at that point, but I'm pretty sure it would have been about 65 to 70. Because $3 is quite a big move for the FXE. A $3 move in the FXE means that there was, in the Forex market, the euro went down from 1.32 to 1.29. So that's a pretty big move in the Forex market. So, and the FXE obviously mirrors that relationship there. So it was a pretty big move. And so at 135, it was an in-the-money put. That was again a very good decision because we were able to capitalize on the down move. But what's even better was the timing, because if we look at the charts for FXE, and this is what we see, and we almost put it exactly, the trade exactly on that day. And obviously this it is a stroke of luck. It's pretty clear you can't get your timing so perfect. Very rarely can you get timing perfect like that, but you don't need to get your timing perfect at all. Yeah, as long as you get in with the trend, that should be good enough. So this was a very good entry point, and we've been riding the way down, all the way down to 128.72. So on April 27, we opened that trade. Then the first time we checked it was about 5 days later, and we took off 5 contracts. So we had started with 20 contracts. We took off 5 contracts, and we profited by about $300 to $400 that time. And then a couple of days later, we took off 7 contracts. And we spoke of the elections. We spoke of the euro at that time, and I had a good idea that it was going to go further down. But, whenever there's a high impact event like that looming around the corner, I prefer not to get into the trade. So that's why I took 7 contracts. We took a profit of about $800. And so we already had a total of about $1,200 profit on that. And then we also spoke of 129 and the 129.5 levels and things like that. And then we let the trade slide for about 4 or 5 days. And on May 9th, what we did was we had a $1,700 profit just on the 7 contracts, just on the 8 contracts that we had left. So we sold 3 at a profit of $700. So totally, we've booked about $1,900 profit on the FXE trade itself. So that's where we stand today. And if we look at our position, it is up by another 1,000 and change. So totally, we would have, if we had to close out the position today, we would have realized a profit of almost $3,000 on this trade. So, and the trade would have lasted us just about 15 days. Today is May 11th, so it's 15 days today. But we're not going to close the trade. But what I'm going to do is this. Now all I want to do is, I'm perfectly happy to close out this trade, but all I want to do is protect my profits now, because we have $1,000. And if you recall, yesterday we put in this order which was conditional at the euro going above 129.50. So today we see that the euro has gone down a little bit more. Now it's trading at 128.72. So that's the FXE. It's trading at 128.72. So what I want to do is, my logic is this. If we wait for the euro to go up to 129.50, we might lose about $400 of this profit that we have right now, because that's a move of almost 75 cents on the euro, and that could impact our position by about $400. It's just a rough calculation, but it could impact our position by $400. So I don't want to do that. I want to protect my profit at this point, because this trade has worked very well, and we don't want to give it up at the end. So what I'm going to do is this. I'm going to change this order, and instead of the threshold being 129.50, I'm going to make it as 129. So I can't do that on this screen. I have to come here and I have to replace the order. So what I have to do is then come here, and then what I'm going to do is set my threshold at 129. So it's right now trading at 128.73. If it goes up to 129, then we'll probably just lose about $100 or $150 at the most. But at that point, if it's going to cross 129, then I want to get out of the trade. So what I'm going to do is, now 129 being a round number can act as a resistance also. So I'm going to put my threshold 1 cent over 129. And so what we now have, the situation is, and if I click OK, then I will confirm and send that. And what it is you can see this order replacing this FXE mark at or above 129.01. And at that point, what this order will do is it'll get triggered, and then we will sell our FXE position at the market price at that time. So that's what we're going to do. I'm going to send it, and let's go back to our monitor screen. Let me explain this. So again, it's a wait condition, and the wait condition, you can see it over here. Now we have the FXE mark at or above, this is at or above 129.01. So what we did was we moved the threshold from 129.50 to 129.01. So this is like a stop order, but it's a conditional order. And what we are doing is we are protecting our profits. So if FXE goes up, if it turns around, we've seen on the charts that FXE is still on a downtrend. So I don't expect it to, turn around and make some huge move. But if it does, and even comes up to 129, I want to close out this position, because we would have then captured about $2,700 profit on this trade. The trade worked perfectly. We put our position in at the best possible time, and also the selection of the in the money put in this case was frankly excellent. So we wrote the write down, and now it's time to exit. So I'm moving up my conditional order, and if it comes to 129, I'm perfectly happy getting out of the trade. However, on the other hand, we are still giving ourselves room to go some more down. So if it goes down to 128 or below that, then we'll probably see another $500, $600 profit on this trade. So we'll just let it play and see. And now I'm perfectly happy to close it out at 129 and come out of this trade. So we'll come back and visit this.